Live from Bloomberg's World Headquarters in New York, I'm Kaylee Lines.
And I'm Tim Stenovec stepping in for Matt Miller. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, we are just 1 week away from the midterm elections. Grayscale executive Craig Salm will join us with insight on what crypto regulation voters want to see.
And most may call it a risky bet. We're going to weigh the pros and cons for crypto in your 401k. We do that with David Ramirez, co-founder and CEO of the retirement plan provider ForUsAll.
Plus, the crypto winter continues to bite. Mike Novogratz's Galaxy Digital is the latest firm exploring big job cuts. We'll have details ahead.
That's all ahead, but first, here's a snapshot of the crypto market. The biggest cryptocurrencies out there, well, Bitcoin was defying the equity markets. It has since moved just ever so slightly lower. We can go ahead and call that flat. Ethereum, though, higher by 0.4%. October, a really good month for Bitcoin. It was actually the first up month for the coin, going all the way back to July. And then I really want to talk about Dogecoin because that's where all the action is today, and it's where all the action has been over the last week. It's up more than 8.2% today, up more than 100% over the last week. You can thank Elon Musk, a Dogecoin fanatic, for that rise. Keep an eye, though, on MicroStrategy. It was higher, now it's lower, down by 1.6%. The company does report its earnings after the bell today. We'll keep an eye on for all those details.
Yep, we will definitely be watching for that today, Tim. But let's talk about what we will be watching a week from today, and that is the midterm elections here in the U.S. The crypto industry has its eyes on Congress, and the big question is, after the vote, will we finally see progress on regulation?
Our regulators and, frankly, our Congress is an hour late and $1 short. And we need to catch up with where these cryptocurrencies are going.
Congress has been calling for greater regulation of crypto for years, but it's been a lot of talk, and to this point, not a lot of walk.
We have the intention, we're just not quite getting it over the line.
The crypto industry has been asking Congress to help create the rules of the road, but optimism on progress has faded as the midterms draw closer.
There was some hope from many in industry that this was actually going to happen this year, that a bunch of bills that had been proposed were promising, that we could actually see some movement here on Capitol Hill. But just like pretty much everything in Washington, heading towards the end of 2022, it all seems kind of stuck right now.
The bills that have gained the most traction include legislation to regulate stablecoins and to give the CFTC more power to oversee digital assets. But success on those initiatives will have to wait until after the midterms.
I think both Kirsten and I believe that the bill in one piece as a total bill is more likely to be deferred until next year. It's a big topic, it's comprehensive, and it's still new to many U.S. senators. It's a lot for them to digest with the few remaining weeks we have in this calendar year.
Big names in crypto like Sam Bankman-Fried, the billionaire founder of FTX, are also trying to make change with their dollars, emerging as influential political donors. While he says he's motivated primarily by pandemic prevention and wants to support candidates who will prioritize that, he also has been pushing the regulatory agenda.
I have a duty as a member of the industry to try and get us regulated, to try and move the industry in a more responsible direction. And I think that requires engagement. I think it would be irresponsible of me not to engage, with Capitol Hill, with regulators. And the things that I've been arguing for are more regulation for the industry. I think that's what's right for the country.
Bankman-Fried is the fourth largest individual donor this midterm cycle and has made about $40 million in political contributions this year. He has said he could give even more in the 2024 race.
I think that you're going to see more people pushing into politics because now the interaction with DC is going to be one of the main drivers of whether enterprises are able to grow and operate successfully.
All right, so let's talk more about the intersection of politics and crypto. According to a survey conducted by Grayscale and the Harris poll, there is bipartisan support for greater action in Washington to clarify and strengthen crypto regulation. Joining us now is Craig Salm, Chief Legal Officer for Grayscale, which is the world's largest digital currency asset manager. So, Craig, great for you to be here. Thank you so much for joining us. Your survey finds that about 4 in 5 Americans feel that there needs to be clearer regulation of cryptocurrency. What kind of regulation do they want to see?
So that's certainly one of the key findings in the report, that you have over 80% of respondents saying they want more clear regulation. That's something that we're hearing anecdotally. It's something that we're also hearing with meetings that we have down in DC. In terms of the type of regulatory clarity, the poll did not get into those specifics. One common factor was more consumer protection, which is also consistent with what we're seeing from things like the White House executive order from last March, where for the first time you had the White House calling for cohesive action to have a plan so that America could stay the competitor and be the leader in crypto. And the way you do that is by, one, promoting innovation, allowing it to flourish, while also protecting investors and consumers. And this poll is certainly consistent with that.
And what does the poll indicate about how it affects people's desire or eagerness to vote, how they are voting?
So upwards of one-third of respondents said that they are considering crypto when they go to the polls during this midterm election. More than half also said that they would more favorably consider a candidate if they were interested in staying informed about crypto. And that's consistent and important. You know, this is a new asset class. There's a lot of innovation around it. There's a lot of risks around it. And they want to make sure that those that they're voting for are staying informed about those two things.
Do they care who does the regulating? Is it the SEC? Is it the CFTC? Do they even know who would be doing the regulating or have a preference there?
Yeah, that's a really good question and gets to one of the biggest questions that is now being grappled with in Congress. Who should the regulator be? Other parts of the world don't necessarily have this kind of question because we're unique in that we have multiple different financial regulators that cover different assets and different types of intermediaries. Right now, there's a couple of bills being passed through Congress, like the Digital Commodity Consumer Protection Act or the DCCPA. That's from Senators Bozeman and Stabenow. And then the Responsible Financial Innovation Act from Senators Gillibrand and Lummis. Each one of those bills would give more clarity to the types of centralized intermediaries that exist in crypto. Some of those falling within the CFTC jurisdiction, which regulates commodity futures, others falling under SEC jurisdiction.
Well, what do you want, Craig? What does Grayscale want?
I think it really depends on the type of use case that you're talking about and the intermediary. So like the internet, there's not one singular use case for crypto. Some cryptos are more like financial assets, so something like a Bitcoin or stable coins. Other cryptocurrencies allow for more complex types of transactions using smart contracts. You can move on the spectrum and get into decentralized finance. And then even further down, you have things like gaming and entertainment and metaverse. No one regulator necessarily should be covering all of those different use cases. Right now, what I think is really interesting with the proposed legislation is that you're having a focus on the centralized intermediaries, the exchanges, the custodians, the brokers, the dealers. Those are the focal points where you have a lot of the more traditional financial risks, things like custody and counterparty risk. And that's where I think if there is going to be regulation, it should be applied, in contrast to something like decentralized finance, which is more of the protocol technology, which is just a different area on the risk spectrum.
Right. It's a big space, and obviously there's a lot of different regulators at play. Let's talk about one in particular, the SEC, because as we know, Grayscale and the SEC are in a bit of a tussle when it comes to the Grayscale Bitcoin Investment Trust, GBTC, wanted to make it a spot ETF. The SEC slapped that down. Now you've sued them. Can you just talk about where that lawsuit stands as of now?
Sure. So our number one goal in the last year, and for really since Grayscale's existence, has been to convert Grayscale Bitcoin Trust, GBTC, into something called a spot Bitcoin ETF. A Bitcoin ETF would really be one of the most accessible and safe way for investors to access Bitcoin. But importantly, today in the US, we do not have that type of vehicle. That's despite other countries like Canada and other parts of Europe having not just spot Bitcoin ETFs, but Ethereum and other digital currencies. And we've been trying to convert our fund into that type of fund. Today, GBTC is the largest Bitcoin fund in the world. It has about $15 billion of AUM. Trades tens to hundreds of millions of dollars of daily trading volume, represents 850,000 plus investor accounts across all 50 states. And so a lot of investors are using this as their way to access Bitcoin, but it's not as optimized as what an ETF would be. So unfortunately, this year, we were denied by the SEC to convert it into an ETF, and we've since challenged that decision in the DC Circuit Appellate Court. We think, consistent with what this survey finds, that Americans want more regulated ways to access Bitcoin. A spot Bitcoin ETF is one way to really support that cause.
Well, certainly winning the lawsuit would be the best outcome here. But what's the worst outcome? Is it actually losing the lawsuit? Because if you think about it, if you lose the lawsuit, then competitors to you wouldn't actually be able to go and create this product. So what is the worst outcome?
So right now, we filed our opening brief. We have really strong, compelling arguments in there that we're really looking forward to seeing the court and their views on that. 2 weeks ago, several amicus briefs were filed in support of our case as well. You had amici from traditional finance, represented by the Chamber of Commerce, to the crypto sector, represented by the Blockchain Association and other joiners. You also had former SEC and CFTC officials all supporting this cause. And so the diverse amount of supporters that we got, we think, is really paints a persuasive picture for the panel of judges to hear this case. The next step is the SEC will reply to our brief, and we'll just take it from there. But we think we have very strong, compelling arguments.
I'm wondering how the survey you conducted may fit into that argument that clearly there is public appetite for the American voter to get these things regulated, to have access to these kind of investments. Is there a way for you to use that to amplify the pressure on the SEC, even if it is through the route of giving it to lawmakers and saying, hey, guys, what are you going to do about this?
So I think in this asset class, it's natural from a regulator's perspective that it takes time to get comfortable with it. Bitcoin yesterday celebrated its 14th anniversary since the white paper came out. Since then, many other digital assets were invented. And if you're a regulator, you have a tough job wanting to, one, balance promoting innovation while also protecting investors and consumers. Personally, I've been very impressed with the level of education and engagement the SEC has expressed over the years. I think eventually we'll get there. Right now, we're just really focused on this petition for review challenging the unfortunate denial of GBTC, and we'll just take it from there.
All right. Well, as that evolves, feel free to come back and join us. Thank you so much for being here. Craig Salm of Grayscale Investments. Thanks for being here. All right. Coming up, we're going to talk more about regulation, specifically as how it relates to your retirement investments. David Ramirez, co-founder and CEO of ForUsAll, a retirement platform that gives people access to crypto in their 401ks, will be joining us.
And Bloomberg's learned that Mike Novogratz's Galaxy Digital may cut up to 20% of its workforce. More details ahead.
And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg. This is Bloomberg Crypto. I'm Kaylee Lyons with Tim Stenovic. Matt Miller is off today. How much risk do you want in your retirement plan? Money management giant Fidelity made headlines earlier this year when it announced plans to bring crypto to its workplace 401k plans. The move highlights the institutional push to capitalize on crypto enthusiasm, but regulators keep waving the warning flags. Claire Ballantyne, Bloomberg personal finance reporter, is joining us now for more. So, Claire, what are the current crypto options for a 401k? Where do we stand?
So it's still kind of evolving. So Fidelity has made this announcement, and they're still working to roll it out. So offering crypto investing through their retirement plan. A company called ForUsAll is also rolling out some options. It's an evolving space, but at the meantime, U.S. regulators have really expressed a lot of concerns over this. And, I think crypto investing in general is worrisome to regulators. Now we're talking about retirement plans. So
wait a second. Regulators are not embracing this with totally open arms. What specifically are they concerned about? What have they expressed when it comes to regulatory concerns here?
Yeah, so I think there's the obvious concern is how volatile crypto is. Just even thinking about a year ago at this time, how different the picture was than right now. So there's that portion of it. There's also some concerns about the custody of it, how it's stored, who's storing it based on which retirement plan, and how much oversight the government can have of those holdings in general.
All right, Bloomberg's Claire Ballantyne, thank you so much for joining us. We got a great guest when it comes to everything happening in retirement accounts. David Ramirez is the co-founder and CEO of ForUsAll. It's a retirement platform that gives people access to crypto in their 401ks. David, good to have you with us this afternoon. We're going to get to the product in just a second, but first, I want to talk about ongoing litigation right now because ForUsAll is suing the U.S. Labor Department, claiming that regulators breached their statutory purview by threatening a, quote, investigative program aimed at plan sponsors that offer digital assets through their core plan lineup or self-directed brokerage accounts. More recently, the company filed a motion yesterday. Where do things stand when it comes to your lawsuit against the Labor Department?
Well, I think certainly it's an ongoing lawsuit, so I can't get into too many details. But from our perspective, the reason we filed the lawsuit is that at ForUsAll, our core mission is really to provide every American equal access to wealth creation. We've seen a sea change over the last decade or so in terms of the use of alternative assets in institutional portfolios for family offices, high net worth individuals. Unfortunately, the average American does not have access to these alternative investments in their retirement plans. And so we began to fix that, beginning with cryptocurrency. The DOL, as you know, issued some strongly worded guidance that appeared to be an attempt to ban cryptocurrency as an asset class in the 401k. We did not feel that was appropriate. So we filed the lawsuit to preserve the freedom of every American to invest their 401k as they see fit.
Well, David, let's talk about the Labor Department's reasoning. They essentially said that cryptocurrencies can present serious risks to retirement savings. They listed a number of concerns, including valuation, obstacles to making informed decisions, prices that can change quickly and dramatically, an evolving regulatory landscape. Aren't some of those things true? Why don't their concerns have merit?
Yeah, so I think let's take them one by one. So first, the volatility of cryptocurrency. No doubt about it. Cryptocurrency is more volatile than many other traditional asset classes. However, it's not more volatile than many growth stocks. I mean, look at Meta. It's down more than Bitcoin year to date. So the first question is, if volatility is the metric, where is the Department of Labor going to stop? Are they going to suddenly say that high growth tech companies that are publicly traded are too risky for people's retirement? They certainly have no legal authority to date to ban any particular asset class. Then we could take a look at the other, which is the risk of fraud. That's a very real risk. There are thousands of cryptocurrencies, many of which are not legitimate or may not be appropriate for a retirement portfolio. The answer, in our opinion, is not to exclude the asset class, but rather to put appropriate education, guidance, and guardrails in place so that the crypto assets that employees do have access to are those that have gone through a screen to reduce the risk of fraud and theft.
How do you build in those protections to your product? What does that actually look like?
Yeah, so for us, investor protection is a critical cornerstone of what we do. So first, it's about who has access to the cryptocurrency. We do not put cryptocurrency in the core 401k menu. The core 401k menu for our clients are traditional mutual funds. However, we do provide a self-directed window that allows sophisticated employees to access a broader range of potential growth opportunities via cryptocurrency. But in order to access that crypto window, not only do they have to go through very comprehensive risk and legal disclosures, but to make sure that people read them, we actually provide a quiz. So you have to pass the quiz to demonstrate that you actually understood the key risks. Once you're in the cryptocurrency window, it's all about helping put guardrails in place so that employees that are sophisticated could use that asset class prudently. We cap at 5% the amount of somebody's 401k that can go into cryptocurrency. And then we monitor those allocations. The extent to which their crypto allocation exceeds 5%, we're going to send them alerts, letting them know that they might want to consider rebalancing some of their crypto into traditional assets.
Give us a little guidance, David, on what people are actually doing when it comes to the platform. You know, are people trying to get above 5% to some extent in their portfolios? And look, I take a look at your website and I see the companies that do offer these plans to employees. A lot of them, including Grayscale, who we just had on, are companies that are in the crypto space already.
No, that's a really good point. And certainly, I think for us, 5% is the default cap that we started with. We do certainly hear a lot of demand, particularly from those in both financial services, asset managers, venture capital, and then also those that are very actively involved in the blockchain ecosystem. They want more. And I think we're very closely looking at ways that we can provide the ability for people to gain greater access, but again, making sure that the appropriate guardrails are in place so that it's those that are sophisticated that are and know what they're doing are able to increase their allocation.
All right, David Ramirez of ForUsAll, thank you so much for taking the time and joining us. Really appreciate it. And be sure to check out our Bloomberg Crypto podcast. It dives deeper than the daily market buzz to explore how this asset class is changing the way we live. Look for it every week through the Bloomberg Professional app, iHeartRadio, or wherever you get your podcasts. This is Bloomberg. This is Bloomberg Crypto. I'm Tim Stanivek with Kaylee Lines. Now to some crypto stories that caught our attention this week. A Justice Department probe into the Tether stablecoin is getting a fresh look. After months of legal wrangling, federal prosecutors in Manhattan are taking over the inquiry into whether Tether deceived banks they used to move cash. In a statement posted online, Tether said the allegation is, quote, old news that isn't even factual.
Michael Saylor's MicroStrategy is likely to show a return to profitability when reporting third quarter results. That would be a change from the second quarter when the company lost more than $1 billion. Still, the return to profit may be short. Soon, MicroStrategy will most likely be reporting more volatile results under a proposed accounting rule change that would require valuing Bitcoin at market prices.
And Bloomberg has learned that the crypto financial services firm founded by billionaire Michael Novogratz may cut up to 20% of its workforce. Galaxy Digital currently has 375 employees. A spokesperson says while the industry faces macroeconomic headwinds, Galaxy remains focused on building for the future. The firm reports third quarter earnings on November 9th.
And of course, Tim, Galaxy is just the latest example of layoffs we are seeing in the crypto space. I mean, just in the last couple of months after the big leverage washout, the issues we saw earlier in the spring, you had the likes of Coinbase, Genesis, BlockFi, all announcing job reductions, and Galaxy Digital apparently not immune to that kind of trend.
Yeah, the blow up essentially all connected to Three Arrows Capital and the contagion there. The thing about Galaxy, though, is it had significant exposure to Do Kwon and Terra, and Mike Novogratz has called that a mistake, but certainly that affecting the company significantly.
Yeah, he even had the tattoo. So it'll be interesting to see
yes, the Luna tattoo.
how this evolves. Yeah. Obviously, they're in their quiet period right now because they will be getting earnings next week. But hopefully we'll have Mike back on this show to talk about all of this soon and what kind of job cuts ultimately we could be seeing at Galaxy and really where else the layoffs come in the crypto space. Thank you so much for being here, Tim. It was great to have you.
Thank you for inviting me.
Week.
It was great to join you.
It's the crypto in real life crossover. So this was fun. Don't forget to catch us next week at a special date and time post midterms. We're going to be live on Thursday next week, November 10th at 1 p.m. Eastern. And among our guests, Michelle Bond, the CEO of the Association for Digital Asset Markets, will be joining us. Live from New York, this is Bloomberg.